Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a comparison between Apex Frozen and Avanti Feeds as to which stock is better, which one is better to invest from a long-term point of view, and which one you should avoid. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about this comparison, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get that $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. So that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can become a member on YouTube as well with a monthly membership. Now about the industry, the fishery industry or pisciculture industry has had the demand which is coming back post the pandemic, and global movement of goods is picking up. And basically, these two companies are big in exports. So export of food products, etc., were really hampered during the pandemic and over the last 2 years. But now things are looking better, although we are not at the pre-pandemic stage. Global fishery industry has taken a hit in the last 18 months, as I mentioned, and logistics and movements have been a challenge in this health environment. But it's set to grow once things completely open up, probably 2 more quarters, 2 to 3 more quarters, and things will look very good from there on in. So it will do well, and a PLI in this segment is also a big positive for both the companies. Now, looking at the comparison for this, Avanti Feeds has a market cap of 7,500 crores, so a larger company compared to Apex Frozen. Operating profit margin is less in Avanti, whereas Apex has a OPM of around 14%. Return on equity of 20% in Avanti Feeds is pretty good, whereas Apex Frozen Food is around 10-11%, and that's why Avanti has always traded at a you can say better level in terms of PE, gets the higher valuation. It is trading at 1.5 times sales, which is much better than Apex at 3.5 times sales. And there are 17% FII plus 15% DII holding here. Although it has decreased over time, it has not been that great, so it has been decreasing over time. Whereas in Apex Frozen, it has been DII holding has been of around 7.5%. If you look at return on capital employed, better in Avanti, and stock is up only 12% in the last 12 months, whereas Apex has just gone up in the last few weeks, although the stock was flat for the year. Promoter has around 43% holding, whereas in Apex we have 72% holding, and Avanti Feeds is trading at a PE of only 30, whereas Apex being a smaller company with a smaller base trading at 25. I think Avanti is trading at a very decent levels at the moment. The 52-week high for Avanti Feeds 675, so has come down. So basically, it seems like Avanti Feeds looks like at a very reasonable levels compared to Apex, being a larger company coming at such a market cap to sales, just about 1 or 2 times market cap to sales. So in a nutshell, both the companies are close to the 52-week lows, and they have come down appreciably from the highs, and valuations look attractive in both. Margins are better in Apex, but ROE is better in Avanti Feeds, but it is declining, and that's why the stock has not performed. So basically, Apex Frozen is doing much better compared to Avanti Feeds in terms of margins, but profitability is better still in something like an Avanti. That sector is under pressure with heavy raw material cost at the moment. Probably in the next 2-3 quarters that will subside, and institutions have bought into both stocks in the last 2 quarters, which is a very good positive because in most of the cases institutions have sold larger companies in the market in India. So my call is both are decent firms, but wait for strong up move in them to pick one of them. Best of the days of the sector may be behind us, but you can get 20-25% CAGR growth as and when things really pick up in this industry. So if you have more than 3 years view, only then get into these companies. Otherwise, avoid the complete sector. So this was a video on the comparison between Avanti and Apex. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.